In today's episode, we're still taking a little break from the One Big Beautiful Bill Act. Kinda. This, some numbers are affected by the One Big Beautiful Bill Act, but I want to talk to you today about filing status. Specifically, the head of household filing status and if you should file as head of household.
Welcome to the Tax Relief with Timalyn podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey, family. Welcome to episode 70 of the Tax Relief with Timalyn Bowens podcast. Listen, if you're a new listener or if you've been tuned in since 2022, I want to take this time to say thank you. Thank you for listening today. Thank you for listening yesterday. Thank you for liking episodes, for sharing them with your family and friends. There's no way in the world I could have gotten to episode 70 if it weren't for you. You are the reason why I do this, okay? And I appreciate your support and your feedback and letting me know how you've enjoyed the episodes, how the episodes have helped you. It does my heart good to know that this podcast is actually making an impact in people's lives, not only helping them to get out of tax trouble, but sharing preventative care so that you don't end up in trouble with the IRS, right? Because you know that I have a mission to fill the tax literacy gap one taxpayer at a time. Okay? So in last episode, 69, we were talking about the IRS being limited but not shut down due to the current government shutdown. Okay? So in today's episode, we're still taking a little break from the One Big Beautiful Bill Act. Kinda. This, some numbers are affected by the One Big Beautiful Bill Act, but I want to talk to you today about filing status. Specifically, the head of household filing status and if you should file as head of household. That's a question that I get every year on the YouTube channel from people who maybe they're single and have children, or maybe they were married and now they're separated. And then some people, if they are caring for family members or others who are depending on them, they've heard through the grapevine that they can qualify to file as head of household and they're unsure. So today's episode is one of those preventative care episodes. I want to give you the information about qualifying for head of household because one, I don't want you to claim that status and you don't qualify to, okay? Because the IRS is slow and not stupid. I don't want you to get a bigger tax refund or have a smaller liability because you claim the wrong status. So, first things first, making the decision isn't as simple as, oh, I want to be single this year. I want to be head of household this year. No, there are actually criteria that the IRS has as far as who qualifies for head of household. Now, we have three main requirements. Requirement number one is going to be marital status. To qualify as head of household, you must be unmarried or considered unmarried for the tax year in question. And then the next thing we're looking at is household expenses. You have to pay more than half the cost of maintaining a home for the year. And the third requirement is have a qualifying person living with you for over half the year. Now, there is an exception when we look at the qualifying person living with you for over half the year. That exception is if the dependent is a parent. In that scenario, that dependent does not need to live with you. Now, before we get into the nitty gritty, let's talk about married. Okay. Now, I've gone over this before in different classes about divorce and taxes for tax professionals, but I don't know that I've actually covered it for you all here on the podcast or in Tax Tips with Timalyn. So please charge my head, not my heart. To be considered unmarried means that at the end of the year, we could have somebody who's legally separated from their spouse, or if we have someone who is married, but that spouse has not lived in the same home as them for the last 6 months of the year, they also, for IRS tax purposes, could be considered unmarried and qualify for head of household. Now, in that situation, where we have the taxpayers who are legally married but did not stay at the same residence for the last 6 months of the year, we have the choice between married filing separately and head of household. Now, if we have someone who they are single, not married, never been married, their only options would be single or potentially head of household. Let me explain. When we talked about who qualifies for head of household, the second requirement is household expenses. This is something that people just kind of brush over. So I'll have couples who are together cohabitating, not married though. And if they have multiple children, one partner will take one child and claim head of household, and the other partner will take a child and claim head of household. Here's why that doesn't work. For household expenses, in order to qualify as head of household, the person claiming that status is required to have paid more than half the expenses to keep up the home in which they habitated in. These expenses are going to include things like rent or mortgage interest if you own a home, property taxes, utilities, repairs to the home, insurance, so think health insurance, we have dental vision insurance, and food that's eaten in the home. Now, if we have two partners who are cohabitating in the same home, do you see what the problem is? If we're doing 50-50, that means neither one paid more than half the expenses to keep up the home during the year. If that's the case, then they would each have to file as single, not head of household. Now, the partner who keeps up the home in terms of paying more than half the expenses, they could file as head of household and the other partner file as single. But see, unfortunately, this is to no fault of your own. There are tax professionals out there that will say, well, partner A, you take one child, and partner B, you take one child, and we'll file you both as head of household. Even though they do it, it is not correct. Okay. Based on the reasoning I just gave, yes, both taxpayers aren't legally married, but they're not both paying more than half of the expenses to keep up the home. Now, you may be thinking, what is the big deal? What's the difference between single versus head of household? Well, for head of household, it allows for a lower tax rate and a higher standard deduction. And that combination can actually reduce your tax liability quite a bit. Let me give you an example. For head of household filers, Remember, I just said it allows for a lower tax rate, right? For the 2025 tax year, which we're in right now, so for people who are filing this spring, head of household filers, their income, taxable income, up to $64,850 is still taxed at 12%. Now, for single taxpayers, their taxable income up to $48,475 is going to be 12%. So you see there, just when we're looking at the tax brackets, the head of household filer is getting an additional 16,000, a little bit over $16,000 that's allowed to be taxed at the 12% rate. Whereas if that single taxpayer had that additional 16,000, they're not going to be paying 12% on that. They're going to jump from 12% to 22%. Okay? So we have the more favorable tax rates. Now, looking at the standard deduction, and as I'm referring to taxable income, the standard deduction is the amount that you are allowed to deduct from your income, even if you don't itemize. For the 2025 tax year, so again, right now, when you go to file in the spring, if you are single, your standard deduction will be $15,750, which means that we'll look at your gross, so the amount that's on your W-2, any interest forms, any other income forms, and before we get to your taxable income, we're going to subtract $15,750. Okay? But if you are filing as head of household, we're going to subtract your first $23,625. So not only are we allowing for, or not we, but the IRS is allowing for a lower tax rate, they're also saying, hey, if you're head of household, we're going to automatically let you deduct more money before we even apply a tax rate to your income. So, just from that, you can see why somebody who's single would be attracted to wanting to file as head of household. Okay? Now, we've talked about the marital status, we've talked about household expenses. There must also be a qualifying person. I want to hit this real quick because I'm often asked, can I claim my girlfriend as a dependent on my tax return? Can I claim my boyfriend as a dependent on my tax return? The answer to that question is no. Your significant other is not a qualifying person when it comes to head of household status on the tax return. Okay? Even if they were unemployed and you're still technically single, you paid more than half the expenses, they are not eligible to be claimed as a dependent because they do not meet the criteria for a qualifying person. Now, when we look at who a qualifying person is, it doesn't necessarily have to be a child, although that's what we first go with. So, a qualifying child would be one who has lived with the taxpayer at least the last 6 months of the year, right? And we're looking at majority of the year. This child doesn't necessarily have to be the child of the taxpayer. And this is where things can get a little sticky. This could be a grandchild. Again, we have to make sure that other criteria are met. This could be a niece or nephew. Okay. Now, also with this, a qualifying child, if it's not the taxpayer's child, is usually a specified relative. Okay. The IRS has additional criteria that I will link in the show notes as well as an interactive tool test that you can use to see if this person actually qualifies as somebody that you can use for these purposes. Now, if you are a foster parent and this child has been placed in your care and you've provided more than half of the expenses to keep up the home and they've been in your care for more than half the year, that's when you could reach out to the agency which placed them with you to get the written consent for you to be able to claim them on your tax return for head of household status. Okay, and then they would give you the social security number, etc. Same thing if you have adopted a child in the tax year. So if you've adopted a child in the tax year, you wouldn't necessarily have to have them for more than half of the tax year. It's going to count as a full year no matter when you got them in the year, just like when you have a child. A child can be born December 31st. As long as it's still 2025, you can claim them as your child on next year's tax return. Now, they don't have to be a minor. If you have a child who is under the age of 24, okay, a full-time student under the age of 24 who lived with you more than half the year, they still qualify as a person for a head of household. Now, with that being said, you may be concerned if they're away at school and say, well, they don't technically live here half the year, but absences such as being away at school, being away at summer camp, if they were in a hospital, those things don't count as them being outside of the home. Okay, so awesome for that. In addition to this, with a qualifying person, if you have a child who is disabled, even if they are over the age of 24, they still can qualify as a dependent on the tax return. If you provide more than half of the upkeep of a home for an elderly parent, if they're in a nursing home or if they live in your home, they may also be eligible to be a qualifying person. Now, we don't have a lot of time in this episode, so again, I'm not going to go into all the tests. However, I'm linking the interactive tool that the IRS provides down below. So if one of those scenarios sounds like something that you're dealing with right now, I want to encourage you to use the interactive tool. Okay? So again, we're going to go back. Filing as head of household, should you file as head of household? It's not a direct yes or no. We need to make sure you actually meet the requirements. Are you considered unmarried for the tax year? This could be single, this could be someone divorced, this could be legally separated. Okay? If you're divorced, as long as that divorce took place on December 31st, 2025, you were considered unmarried for the entire year. Okay? When we look at you providing a home, you must have paid more than half the cost of keeping up a home for the year. Remember, that's going to include rent, mortgage interest, utilities, property taxes, and food. And then the final test is if you had a qualifying person living with you. Remember again, in the case of a dependent parent, they don't necessarily have to live with you. If you have a child who is away at school, full-time student, they do not have to be in the house with you because an absence like being away at school does not count against you as far as them living with you. Okay? So I hope you got some clarity around your specific situation. Remember, you want to make sure that you are claiming the right status because there are different credits and deductions, and your eligibility may be based on your income. If you falsely have lowered your taxable income because you claimed the wrong filing status and you had a more favorable tax rate, once the IRS catches you, you will be assessed an accuracy related penalty if your tax was understated by 20% or more. I want to help you avoid that. So, just because other people and other couples that live together may both be claiming head of household status, I just want to let you know it's not worth it when you get caught. Okay? So, if you found this episode helpful, please do me a favor. Make sure you like this episode, subscribe to the podcast, and help me on my mission to fill the tax literacy gap one taxpayer at a time, because you never know who may need this. You never know who's struggling with back taxes because they listened to Bobo on the corner and filed head of household when they didn't qualify. Okay? So if that's you, you can reach out to me at bowenstaxsolutions.com so I can help you set up an arrangement that will satisfy the IRS and not bankrupt you. But always remember, even if it's not me, be sure that you get the help that you need. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.